Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 12th of May. All right, now this is as close to normal markets as we've been in a hell of a long time. And what I'm talking about is it's the build-up, the anticipation around the CPI release, the equity markets nervous, the little bit of an increase in yields, the major currency pairs on hold. It's all coming down to this number, and it's a great feeling to have when we know there's a big number coming out that could give the dollar serious direction. Now, when we're talking about serious direction, we're talking about like not just an immediate 500-point move. We're talking about a medium-term trend. Now, just looking at the dollar index, I mean, it has been trading down, came back last week, had a little bit of a reprieve. Then we had the weak non-farm payrolls. It's now traded down below 90.40 and sitting around 90, the figure on the dollar index itself, trading sideways. Now, the momentum is completely diffused, and the market is somewhat cautious ahead of what's going on, because if you read their reports here in Metastock, right, they're talking about even high CPI expectations, which I'll show you the forecast in a second. They are expecting a high year-on-year forecast, a lower month-on-month. But they're saying even if inflation is massively higher, the Fed's not going to do anything anyway. So it's not a buy dollar situation, which would occur in normal markets. So the big risk is a strong number. The dollar doesn't rally. Well, you know what? That's a bit of a precarious situation. The dollar could just start falling. Okay. But on the back of that, this makes it easier to prepare, because like if those CPI forecasts aren't as high as forecast, then and they come in somewhat weaker than the forecast, we could just see a dollar capitulation, right? And that's going to give us trading opportunities across all major pairs. And if I just come back and show you the charts here, everything is primed, right? We've had as I said, the dollar index had the initial move down, now trading sideways. Same with dollar Swiss, down, now sideways. We've got levels all over the place. Dollar yen down, now sideways. Dollar CAD is almost just down, but you can see how it's even paused and going sideways. Now the dollar block on the downside, euro up, sideways. Same for sterling, Aussie sitting there around a bit of a key pivot point, and also the Kiwi. Now, these currencies are pausing because no one jumps in without knowing the answers, right? Volatility around the CPI release with the anticipation is going to be huge. Now, I think weaker CPI numbers, okay, weaker than the forecast. We do get some significant like downward initial dollar moving to the downside. I'd feel comfortable getting in with that. If we get stronger CPI numbers, right, and I'll come into Trading Economics, a good site to check out the numbers. As you can see, the forecast here is for 3.6%. Okay. The previous number 2.6, 3.6%. This is a whole 1%. This is like in normal market conditions, this would be massive. The dollar would rally about 200 or 300 points, but this is a different scenario. The Fed's already told us it's not going to do anything. The month-on-month numbers, right? Previous numbers 0.6, 0.3. They're looking at much lower month-on-month, right? So there's a big issue around, like oil prices are much higher. Now, the good thing about Trading Economics is you can go in and click on the data and get more details around what's going on. So you can see here, this is the data as it's been over the last almost year. You can see there was a pretty steady period here where inflation was, pretty muted. Now we're seeing it spike higher metals, higher commodity prices, less products. So prices are going up for products as well. And that's creating an issue. If you're looking for the calendar down here, you can see how last month it spiked. They're looking for a much bigger spike, consensus 3.6. Trending Economics forecast, they're actually forecasting even a little bit higher than that. An easier way to see that would be change this chart to a line chart. Now you start to see, remember Janet Yellen was talking about if inflation really heats up, well, we've got to start raising rates. Look at this inflation line chart. It looks like it's heading to like 10%, right? This is a bit of a scary chart. As much as the Fed are saying we're not going to do anything with inflation, mate, inflation could get to 5% very quickly. And if they haven't started raising rates, then they lose control of the market, right? It'll be, won't be catastrophic, but I'll tell you what, they'll have to start raising rates and the dollar will rally. So check out Trading Economics. It's a very good page to look at for a bit more history around the actual data. Of course, you can come in and just click on the actual data itself on Metastock and get a lot of details this way. And I'll just let that load. So you can get the history of the stock, you get the charts, you can also, as you can see, you get the sort of progression of the data as well. I tell you what, it all points to higher data. Like this is, the inflation just doesn't happen and change overnight. So you got to think stronger numbers. Now, I was just giving you the scenario at the start of this presentation around weaker CPI numbers. The dollar just bangs to the downside, right? We've got high unemployment. We've got no inflation, no unspending. Bang, it just heads to the downside. It looks like, and unfortunately, we're not going to get that clean situation. It looks like, right? So what you've got to do is, I would be very careful if the number comes in above 3.6%, right? And the month on month, if it comes in at forecast around 0.3, well, you've got one weaker number, you've got a much bigger, stronger number. That's going to confuse the market somewhat. And if with this really strong number, the Fed has already said they're not going to do anything. So will they just start selling anyway? I don't know if they will. I think they may sit tight and wait to see what happens on the treasury bonds and the equities, right? Because, higher inflation generally means a lower equities. So we're going to see what the impact is on equities, see if that's a risk on risk off situation. The yields, right? This is something you got to keep a very close eye on. The yields have been screaming to the top side again, right? And if you look for pressure points, is the market nervous? You bet it is. Check out the volatility index. It's just jumped up from 17 to 23 during the North American session. The market is very nervous about this release, which means it's got even more importance. It's a big directional factor for the dollar. Now's the time to really focus and understand what you're doing. So what do you do from here? Well, as I said, stronger CPI. You're looking at the equity markets and the impact on the bonds. You may miss the first 50 points of a move, 60 points. That doesn't matter. You could probably get the next 200 or 300 because if the dollar comes out with clear direction, it's going to run. The best thing you can do is come back to your charts, clean them up, right? When I talk about clean them up, get rid of the trend lines that don't have any sort of major significance, and start to stick with, you can sort of see here, I'll leave that one there because that's a previous sort of resistance. It's been acting as a bit of a pivot line. So this is what we're left with, right? We've got dollar index. Okay. It's right on the levels, trading sideways through that. So this level here to me is probably the key one. Dollar Swiss, 90.40. Dollar yen's got a couple of levels. Dollar CAD, well, dollar CAD's really just a sell on rallies. Okay. I don't see any other way out of this unless the dollar rallies for some unknown reason. Euro, well, it's right on these key levels. That's why that secondary trend line may come into play. Like sterling, this has been commonplace the last year or two, where it just shoots to the top side and it's sort of sitting here, but there's no sort of key levels around here. If anything, you're just looking at, well, where's it stopped above? It's like 141, the figure seems to be a bit of a level. Aussie's already cruised through a level here. Okay, so that's no good to us. If anything, just looking at 78.17 or back down here around 77.70. Kiwi, well, it's drifting sideways. There's no sort of major entry level there. What do I expect? I still think the dollar falls, right? I still think there's a lot of movement to be had on the top side of the dollar block. I could see euro over the coming weeks up towards 125, 127, sterling up to 145, Aussie up to 82, 83, Kiwi up to 75 cents. I think they're all heading topside. But this is where, you know what, the answer will come up when we get this CPI release. So it's one of those things. We have the build up, we have the general direction of what's going on. We need this data to fit perfectly on top, which is, I mean, weak inflation and should do it, right? It should be just a dollar sell situation because there's no inflation. The Fed definitely aren't raising rates. And in fact, they've got to probably pump in more cash. So weak inflation, I'll be happy to get short dollars immediately. Dollar Swiss, it's at pretty good levels. And dollar yen, it's cruising, but not a lot. And dollar CAD's already come a long way, but believe me, it's got another 300 points on the downside as well. All we want is, ideally, we want weak inflation. It's an easy trade. If we get strong inflation, which is what everything's pointing towards, then it's a bit of a mess. We're going to wait for the mess to unfold, right? And that's where you've got to be a little bit patient on the release. If these numbers are strong, right, strong inflation, see what happens to the treasuries, see what happens to equities, then should have a clear indication of what's happening on the major currency pairs. And that's where the answer is. I expect very thin liquidity on the release, right? So if you're going in with pending orders, you're going to get hacked to death. So just be very careful the way you approach the opportunity. That's where the trend lines come into play. If we don't have trend lines, you're probably not trading those instruments, right? It's an easy one to sort of work out what's going on. And I would expect, with this going on, you've got to think that the safe havens could really come into play here with really erratic numbers, right? And that's the way we got to do it. So for the Asian session, I mean, once again, all you can do is follow the trail, right, of where activity is. So you're looking at the US equity futures, which have hardly moved, excuse me. And so no real indication there what's going on. The majors have stalled. So as we come in through the Asian and then the European sessions, the intensity is going to build. You'll be looking at, if you're ready, look at your news, all it's going to be is the hype around the number, what's going to happen, et cetera, et cetera. So as I said, we'll know a lot more once the number comes out, and then we can get on with it. In the meantime, I'm just having a look sort of up here, right? So if you come back down, there's a lot of UK data out today, right? GDP estimate, manufacturing production, which is the output number there. So keep a very close eye on sterling. It could do its own thing. Now, if those sterling numbers, I'm on the wrong page here. If those here they are here. So they got all these UK numbers coming out. Now, if we get a situation where the CPI and the UK data lines up properly, as in say weak US numbers and strong UK data, man, sterling's going to be like 150, 200 points higher, right? The opposite, well, it's going to be a bit convoluted. As I said, strong CPI numbers. We haven't got a clear answer. Does the market buy or sell dollars? They're saying the Fed's not going to do anything regardless. So it's not really a buy situation, but it may stall. Anyway, we'll have to wait and see what the answers are. This is pretty exciting. Get yourself organized. Make sure you're structured with your capital management before this happens. Otherwise, you can come unstuck very quickly. All right, guys, all the very best. Have a good one. Cheerio.